So good afternoon, everyone. I want to make sure, I had a mute button there and I was talking away and I guess you couldn't hear me. My name is Jason Love, by the way, and I'm going to be your presenter here today. We're going to talk about our secret trading levels from a veteran floor trader. We're going to talk about this here in just a minute. But before we get started here, hey, Ruben, thanks, and Trader, appreciate that. Just want to make sure, I had a quick error message. Just want to make sure that you guys can hear and see okay. Make sure that you can see the screen, you can hear everything okay here before we get started. And while they're doing that, if you just type that in the question box, loud and clear, perfect. If you wouldn't mind telling me where some of you guys are from. I always like to know kind of where the audience is from and those kinds of things. You can do that. That would be cool as well. Just kind of let me know where you're from. Australia, perfect, man. It is late there in Australia, or early, I guess. Indiana, California, North Carolina, Southern Cal, Palmdale, all right. Newcastle, UK, all right, very cool. Place that I'd like to go, England, okay, very good. Awesome, all right, very cool. Somerset, lots of English folks, that's great. The Isle of Lewis, wow, that's very cool. All right, very, very cool. All right, so I'm about to get started here this morning. Again, my name is Jason Love, and I'm the founder and lead trader here at the Oil Trading Group. We'll talk a little bit about that here in just a second. But before I go through that, I just want to let you know that I will have access to your questions. I'll get to those questions at the end of the presentation. I know we all have busy schedules, and for our friend in Australia, I know it's super early there for you, middle of the morning there. And so I will do my best to keep your interest as long as I can here, and we'll try to keep this to within an hour worth of time here for the presentation today. All right, so let's get started here. My name is Jason Love, and I'm the founder and lead trader here at the Oil Trading Group. And I'm going to be presenting to you today a presentation that I've done before. We have a set of proprietary levels that were taught to me by my trading mentor, a guy who traded on the floor of the S&P pits for nearly 30 years. And so he used a variation of these levels in his everyday trading. But before we get started, I just want to give you a quick introduction. Again, my name is Jason Love, and I'm the founder and lead trader here at the Oil Trading Group. This is a picture of me back in 1987, graduating from high school in Odessa, Texas. If you're not familiar with Odessa, Texas, that is in the westernmost part of the state. That's, again, is me graduating from high school. A few short months later, I had enlisted in the United States Navy, and then there is a picture of me after graduation from boot camp. I am a combat veteran, Operation Desert Storm, and I also held a top secret security clearance while I was in Uncle Sam's Canoe Club, as we used to call it, the U.S. Navy. That is a few short 30 years later. That's a picture of me today. Again, founder and lead trader here at the Oil Trading Group. In October, we just celebrated our 10-year anniversary of running a trade room and providing education services and things of that nature. So we just passed our 10-year anniversary mark. I think that was kind of cool. And yeah, I think that was a pretty cool deal, right? So that was in October of 2020. So presentation about our secret, quote unquote, trading levels from a veteran floor trader. And so before I go into that, I always hate kind of putting that down, secret or super special or those kinds of things. That sounds really cheesy. I get it. And so while I use that word and I use it kind of hesitantly, it's actually the truth. The guy that taught me these levels, and I'm going to introduce you to him in a few of these slides coming up here, but the guy that introduced me to that was a real kind of curmudgeonly guy. And I don't mean that in a negative way, but that's just kind of who he was, his personality, right? Not very outgoing and nice guy, super, super nice guy once you got to know him, but it's kind of hard to break that exterior shell. And so when he began to work with me, I had been trading for a while and began to work with me, he would talk to me in lingo and terms that I really wasn't familiar with and that he was, talking about on the floor. Well, he had created a set of these levels that initially he was just not super interested in teaching to me, right? He was very close to the vest. And so I always used to say to him, hey, these secret levels that you have, what does it tell you today? Right. And we kind of went back and forth. And eventually we got to the point where he felt comfortable teaching them to me. And as time went on and all that stuff began to kind of click. But it was initially, that's how the nickname came with these secret levels, right? He wasn't really super interested in telling me much about them in the beginning, right? So having said all of that, the first question you're probably asking yourself in here today is, what is this thing that he's going to show me? Does it actually work, right? And so one of the things that I do in the trade room is we work closely with a group called Top Step Trader. Now, if you're not familiar with Top Step Trader, that's okay. But I'll tell you a little bit about them. They provide trading capital, and there's a few of these out there that have started, by the way. Top Step Trader was the original. There's EarnToTrade. There's OneUp. There's Lilu. There's several of these places out there, but the one that we kind of focus in on is Top Step Trader. And so one of the things that I like to do in our trade room is Top Step Trader provides a set of criteria, by the way, if you're not familiar with who they are. They provide a set of criteria that if you hit certain objectives without breaking or violating one of their rules, then they're going to provide you with funding to trade capital, right? To trade their capital with. So you pay a fee for the upfront interview process, or the show that you can do the meet their rules and criteria, manage your risk, and maximize your reward, and some of those kinds of things. And if you can do that, then they're going to provide you with trading capital. Now, we won't get into all the specifics about how people feel about the rules and those kinds of things, but that's kind of the starting point that I want to start here with you today. And so what I do in the trade room is we get a lot of traders, retail traders, that are candidly underfunded. They don't have enough money to really make it long-term in a business like this. And so one of the things that we do is we kind of point them in this direction, and then we work with them to kind of get through these interview processes so that they can get this funded trading account. So with that being the context of what I'm talking to you about here today, what am I going to show you? What I am going to show you, does it actually work? That's going to be the question that you ask. And so I'm going to show you how it works for us through the lens of one of these prop firm trading accounts called Top Step Trader. Okay, so this screenshot that you see to the left is directly from their website. Back in 2018, Top Step Trader funded 1,020 traders. I completed the process in the fastest time. So if you look there to the left, it says 15 was the fastest number of days to funded trader, right? So they have two steps to get to funded trader. You have step one that lasts a minimum of 5 days, and then you have step two, which lasts a minimum of 10 days. And so then I did a webinar that you can find on the website. If you go to oiltradinggroup.com, you can find this webinar replay on the website, and it was titled "How I Passed the Top Step Trader," the $50,000 trading combine in 15 days. And so I go through some of the details of how we did that. I'm going to post a link here in the main chat window. You can go to the website. If you scroll down, in fact, I'll just do this here really quickly for you. If you scroll down, kind of middle of the page, you'll see how some of the other folks here, there's some trading combines, and here is that YouTube video here, right? So if you go to the website, you'll be able to see that, and here's that same screenshot that I just showed you there. Okay, so passed the trading combine, $50,000 trading account in 15 trading days, and that was the fastest that it was done in 2018. Now, I've done a number of these trading combines in front of a live audience in our day trading chat room. And again, for the same reasons that I mentioned to you before, we like to do this because we know that people come to us and they are underfunded. Also, if you can survive the parameters of a Top Step Trader, even if you're not trading inside of a trading combine, then you are going to ultimately be, or you have a better chance, I should say, of being successful if you can follow the rules of a trading combine. Now, I just posted a link into the main chat window area here, and that will take you to this page, and you'll be able to go through and see some Top Step Trader combines that we've done in the past, right? So if you click here, you can go into January 2015, and you can see kind of the screenshot, and I go through some details and things of that nature. You'll be able to do that for a number of these different trading combines that we've done in the past. Also, if you just take a quick look here, there's a couple things that I want you to look at. We started doing this in front of a live audience in January 2015, and I'm about to show you how we just completed the process a week ago on another one. These are not all encompassing. These are just a few of the trading combines that we've gone through in front of a live trading audience. But here's the thing that I want you to, really want you to focus in on. There's two columns here. I want you to focus in on the average winning trade, right? So over the course of, well, this is 1, 2, 3, 4, 5, 6, 7, 8 examples. The average winning trade was $421. The average losing trade was $119. That's a 3.5 to 1 reward to risk ratio. That's important, and we're going to come back to that here in just a couple of minutes. But the average reward to risk ratio is about 3.5 to 1. Also want you to look over here, the average win duration. We had one where I was holding on to an average winning trade here during this month, or during this particular combine, for 2 hours. That's a little bit of a skewed number. But if you just kind of look at the averages here, I'm averaging about 20 to 25 minutes per winning trade, and I'm averaging about 5 minutes on the losing trade. So I'm holding my losing trades my winning trades 5 times more than I'm holding on to the losing trades. So what does that mean? You've all heard the term, cut your losing trades short, let the winning trades run. So I've got an average winning trade of about 3.5 to 1 over my losers, and I've got about a 5 to 1 average winning trade greater than the average losing trade. In addition to that, you look here at the win percentages, right? These aren't what you would call spectacular winning percentages, but because the average winning trade is higher and greater than, 3.5 to 1 greater than the losing trade, your winning percentage is naturally going to be lower. Also, if you are getting out of trades that aren't going in your favor fairly quickly, that's also going to bring down your winning percentage. So I'm not really interested in winning percentages. The things that I'm interested in is what is my reward to risk ratio, and how long am I holding winning trades versus losing trades. And again, this is not something, if you look here at the largest losing day, this is not something that, you have to be perfect with. Obviously, if you're losing, you're right up against a $1,000 largest losing day, then you're not winning every single day, obviously, right? And you are not perfect, right? But because you have a winning ratio, a high reward to risk ratio, and you have a holding on to your winning trades longer than your losing trades, then you have a better opportunity to kind of do some of these things that we're looking at here. And at the end of the day, if you want to take a look, you just click that link that's in the main chat window, and you'll be able to see some of these details on some of these previous trading combines. Now, in October of this year, so just last month in our 10-year anniversary, we said we're going to go through a trading combine with some of our folks. Now, what you see here is a letter that I received right around the 1st of October that says, congratulations on passing the trading combine and reaching the funded level. Now, I'm not going to spend a lot of time with you here talking about the pro account versus the funded account. Well, actually, let me do that here really quickly. Once you become a funded trader at Top Step Trader, and by the way, you may be asking yourself, what does this have to do with the levels? I promise I'm going to get there. I'm just kind of telling you a little bit of a story here to kind of give you some context and structure around what I'm going to show you with these levels. Once you make it through step 1 and step 2 at Top Step Trader, they then put you into a path. You can either go to a premium funded account, or you can go into what they call the pro account. Now, I highly recommend that if you do a Top Step Trader, you go through to this pro account for lots of different reasons. But basically, you don't have to pay data fees. You still get to treat this pro account as a funded account. And if you make $5,000, if you look down there, that red box, if you make $5,000, then they take that $5,000 account and they fund you with a real account, right? So they take $5,000 and they put it into a real account, real money, $5,000 account, and that becomes your premium funded account, right? So you pass step 1, you pass step 2, you go into the pro account. Once you pass the pro account, they put $5,000 into your regular account, right? So I went through, this was my step 2, 50K funded account. And you can see here that we started on October 14th and it was completed on October 27th, which was a minimum of 10 days. We hit the $3,000 profit objective. Here are all of the check marks here next to it. We hit all of the profit objectives, etc., and we got that funded account. Then fast forward to November 5th, which was just last week. We're in the 9th, today's the 10th, so 5 days ago, we took that pro account, and in less than 5 days, we grew it $5,000 to what you see here. Congratulations, you have earned a premium funded account. and we're thrilled that you're reached this milestone, et cetera, et cetera. But you can see here, we will transfer your pro account balance to your premium funded account up to $5,000. So they're going to take that $5,000 that I made in that pro account, which was in the simulator, right? And so there's some positives about doing that in the simulator. No data fees and any positive slip you get, et cetera, et cetera. Anyway, you get they're going to put that now into the premium funded account here at Top Step Trader. Now, not finally, but we also did in that same window, right? I did a $150,000 combine in front of our group. Started this on October 16th, and we went through to October 22nd. And in 5 trading days, we made almost $13,000. Right? It starts at 150. You hit the minimum of 5 trading days. You hit the $9,000 profit with the profit level there at 163,274. So that's $13,274 in step 1. Now, if you can join us on this presentation on Thursday, I'm going to have an updated slide because we just completed step 2, $9,000 trading in the step 2 150K combine. So you'll get to see that. If you come back on Thursday, I'll have the screenshot of that for you as well. All right, so not only have I done it with Top Step Trader, but we also have done it with a company called EarnToTrade. So EarnToTrade approached us and said, Jason, we are interested. We hear some good things about you. We're interested in having you advertise our premium account, our funded account rather, EarnToTrade. They call it the Gauntlet. We want to have you market our gauntlet to your people. And I said, okay, I'm willing to send out a few emails and have you talk to them. I said, but the first thing I have to do is I have to know that I can pass it. And then I have to know if I do pass it and I make money, you're going to send me money, right? That's the most important thing. Is we're not doing this for our health. We want to know that if you get through it and you can pass it, will they then send you money, right? That's the thing we wanted to know. So I said, before we do all of that, before I start to market and talk to my people about it, I want to make sure that you're legit, okay? And so I wrote a webinar or I completed a webinar here that you see at the top, from start to $5,000 deposit, my experience with a proprietary trading firm, and this time it was with EarnToTrade. Now, if you look here, and it's kind of hard to see, I'm afraid to zoom this in. I'd gotten an error message earlier, so I'm afraid really to tinker with this too much. But what I'm hoping you can see is right down here, you can see where it says EarnToTrade and a deposit into my Chase business account, $5,000, right? And this was done, and you can see down here, it was done in November of 2018. So I was able to get through, I've been able to get through many Top Step Trader accounts. I was able to get through the EarnToTrade gauntlet. And so I'm telling you all of this because, again, the first thing you want to know is, okay, great, he's going to show me this stuff. Does it actually work? A, and B, I want you to know that the reason we can get through some of these things relatively, what's the right term? These things are hard to do, so I don't want to say easily. That you can get through these processes because we have a set of levels that work and that you can use as targets and stop locations that are super effective, right? So let's keep going here and we'll get into some more of that. All right, so before I move on, there is a page here, and I'm going to send you the link to this. There are over 400, and I think at last count, 420 trading videos here on our YouTube channel, and here's the link to the YouTube channel, right, of us showing you trades just like the one we're talking about here. In fact, here is I'm going to post a $3,000 trade on the ES today on this channel, so come back to it and watch. But here's an ES trade that was a $4,000 ES trade, and the way that I do these videos is I give you a little bit of background, a little bit of history on the video, right, and then I show you exactly where we get in, and this video was taken in the live day trading chat room, right? So I don't have the sound up on this, but you can see here that I was down ticks from a previous trade. I show you where we get in. This is the price ladder here of what the trade was actually, where we entered. You'll see the stop, and then you'll see it ultimately get taken down to the target. So there are 400 trading videos for you to go back and look at where I am taking trades that I'm showing you here and opportunities that I'll be showing you here today. You can go back and kind of compare and contrast to the YouTube channel And that link is also here in the video, sorry, in the main chat window there. All right, let's keep moving on here. All right, so before I get started here with the talking about the levels and some of the places here, et cetera, our Uncle Sam here wants us to let you know a few things. The Commodity and Future Trading Commission wants you to know that futures and options trading has large potential rewards, but also large potential risk. You should seek appropriate advice from your broker or licensed investment advisor before taking any action. Past performance does not guarantee future results. The Oil Trading Group, that's us. We do not hold ourselves out as a commodity trading advisor. So given this representation, all information and material provided by us to you is for educational purposes only and should not be considered tailored or specific investment advice. And then, of course, the hypothetical or simulated performance results have certain limitations. And unlike an actual performance record, simulated results do not represent actual trading. To get a complete look, go to the website, go to government required disclaimer, and that will give you an entire overview of the risk disclaimers. All right, so let's talk about what is a market maker. All right, every instrument needs a market of buyers and sellers in order to move on the exchanges. Market makers are high volume traders that literally make a market. These traders provide liquidity by profiting on the bid-ask spread. Now, again, this was more prevalent when there was an actual pit, but again, they provide liquidity by profit and they profit on the bid-ask spread. So this picture here of this guy to the left, that was Patrick. He was my floor trading mentor. This is an actual photo of the creator of the trading levels that I will show you here today. A floor trader was an exchange member who executed transactions from the floor of the exchange. These floor traders fulfilled an important role in commodity and stock markets by providing liquidity and narrowing those spreads, right? Floor traders were also referred to as market makers. So therefore, this is why we call them market maker levels, right? These market maker levels were developed in the 1980s. Again, they were developed by my floor trading mentor, a 30-year veteran floor trader. In their original form, these levels were calculated by hand. And in fact, in our training program, I show you how to calculate these levels by hand also. It's kind of like you remember when you were in grade school. They didn't just hand you a calculator and say, go do it. They taught you how to do it, right? They showed you how to do it. And then eventually they gave you a calculator, or in our case, an indicator that lets you go through and plot that automatically. But it's important. And a lot of educators like me out there, a lot of people that are in my spot, they don't want to give you the guts inside of the indicator, right? They don't want you to know exactly how it works. For us and for me, I do want you to know exactly how it works, right? So if you're on a different trading platform or something ever, God forbid, happens to me, or, you know, we moved from NinjaTrader 8 to 9 or 9 to 10, and I'm not in the business anymore, you're not beholden to a specific indicator. You are going to learn how to draw these levels, right? Which I want you to do, and that's the way that I learned them. And then you have an indicator that you put on your charts, and you can do that as well. Despite the changes in the way that trading is conducted today, remember these were built in the 80s and trading is much different animal today than it was back in the 1980s, the logic for the levels continues to work in today's trading environment. And I'm going to tell you why that is here in just a second. So what are the market maker levels? As you know, the market is continuously telling a story. The story provides the context for the daily trading session. So when we all sit down, we try to look to see what happened on this time frame and that time frame, and then we kind of work our way down into what happened on the tradable time frames and your smaller, and what happened in the overnight session, et cetera. The market is continuously telling a story, right? The market maker levels are the structure points inside of your daily story. And once determined, these structure points are used as tactical areas to make trading decisions, entries, stops, and target locations, right? Very important to understand that this is the context of what the market is looking at. So why do these levels work, right? So you talk to your significant other and you go, so tell me, how is it that the car works? So I don't know. I get in, I put my key in, I put the gas, and it goes, right? And that's okay too. If you don't ever want to get past that knowledge, you just want to know that they work, Great. But I like to know why stuff works, right? And so these levels work because they are measuring time and price rotations. I'm going to say this again here in a minute. But markets, as you know, do not move linearly in nature, okay? The market rallies and it pulls back, and the market will pull back and then it will rally, right? Statistics show that the market will be non-trending greater than 80% of the time. And here's a good example on this profile chart. You have the market selling off and then rally, and then selling off and then rally, and then selling off and then rally, and then selling off and then rally, right? Those are market normal standard type of market rotations. The market rallies and it pulls back. The market pulls back and then it rallies. So in order to fully understand why the market rotates, you must understand the auction process and how markets go about discovering what the fair prices are in any given day. So remember this, the market moves from horizontal development, right, to vertical development, back to horizontal development, and so on, right? So it'll be flat, and then it'll trend, and then it'll come back, and it'll be flat, and then it'll trend, and then it'll flat, right? That's the way the market moves. So the sole purpose, by the way, of the market is price discovery. The market will rotate within a range of prices until a variable changes, right? One of the things that I talk about in our trade room, and you start talking about value, let's say that you own a house, okay? And that house has a range of value, the upper end and the bottom end. But let's say that, and it's been selling at those prices with a gradual increase over the course of the last 5 years. But let's say that they now suddenly discover, a lot of kids are getting sick in the neighborhood, and all of a sudden they discover that there is some contaminant that is getting into the soil or the water underneath the property, and people are becoming sick. All of a sudden, the variable has changed, and the market is going to dramatically drop until it finds a place where people say, okay, I can now buy property here, do the necessary remediation to fix whatever that problem was, and then the value of the property will return. That's what the market is always doing. It is always rotating to find price discovery. How deep is it going to go to where the buyers will step in? Once the buyers step in, how high will it go until the sellers step in? That is a market rotation, and that is what's happening all of the time. That's the sole purpose of the market, is to find these price points where the buyers will step in and where the sellers will step in. So these rotations create a set of measurements that are based upon time and price cycles from previous trading sessions. These measurements are then projected forward and become the structure point for the next day's trading session. So you see these charts on the right here. Let me say this again. The market moves up, the market will rally, it will pull back. The market pulls back, and then it will rally. These set of rotations on a daily basis create a set of measurements that are then projected forward into the next day's trading session. So it is market data driven information, and the calculation provides you with these excellent support resistance ideas, and we're going to talk about that. I'm going to show you some real charts here in a minute, but this is an example, right, of how the market rotated into what we call the RTH signal and then slowly rolled over, paused here at this mid, came down, rallied back up, could not make it to the step above, dropped, couldn't make it to the step above, and then all the way down to close out the day at that bottom level. Again, the market moves in cycles, in rotations. These rotations create a set of measurements. Those measurements are then projected forward into the following day's trading sessions. Now, I get asked all the time, well, geez, Jason, I'm just going to use floor trader pivots, right? Those are created by a floor trader, and they seem to work pretty good, and they do work okay, right? And while both of these sets of levels were developed and used by floor traders, there are some stark differences in how price is measured and how the levels are calculated, right? So standard floor trader pivots, you have the pivot point, that's the high plus the low plus the close divided by 3, very static kind of number. The first resistance point and this first support level is 2 times the pivot minus the prior day low. That gives you resistance 1 and support 1. Then you have the lower support and resistance R2s and R3s, and the S2 and S3. These measurements are basic in nature and do not take into consideration changes in the market and price volatility or any range expansion as it is occurring in real time. So when we have the close here, like on the CL, or when you have the close of the market, right, the 1600 close, those are set in for the day. Those pivots are set in. Those floor trader pivots are set for the day. The market maker levels also do a similar type activity, but then when you get into the RTH session of the next day, a new set of levels form up because there's new information. And then at that point, throughout the rest of the day, 4 times after the RTH session open, another set of levels form up to account for the rotations that go on during the trading session, right? So again, the calculations are based upon measurements which derive from time and price movement for the market maker levels. And because of the time calculation involved, these levels evolve in real time to account for any changes in rotation and new price discovery, right? And so that is the important distinction between your market maker levels and your floor pivots, right? So again, these levels will continue to work because trading is based upon human emotion and groupthink. These levels take advantage of the process of continuous price discovery and provide structure for the daily trading session. So before I go through some chart examples, I'm going to show you two of these types of levels. There's going to be a set called the ETH, or extended trading hours, also known as the Globex session. These levels begin plotting at the close of the day session, or the RTH session, and are valid until the close of the next day's RTH session. They provide structure points, support and resistance for the overnight trading session. Then the next set of levels are what we call the RTH session levels, and they are the regular trading hours, also known as what used to be known as the pit session. These levels begin plotting at the open of the RTH session and conclude at the close of that RTH session, and they are the primary levels that we use during the day hours. All right, so let's take a look at some chart examples. I do see some questions in here. I'm going to kind of go through this, and then I'll come back and get your questions answered at the end here. So let's take a look here. We'll start with the CL. We are the Oil Trading Group, right? So this is your Sierra chart levels here, all right? So these are Sierra chart. We have, by the way, this indicator and this information is available on NinjaTrader 7, NinjaTrader 8, and Sierra charts. If you don't have one of those platforms and you're interested at some point in the training information, remember, I teach you how to draw them. And if you have a standard drawing tool on Thinkorswim, and I know it does, and multi-charts or some other platform, Cunningham Trading Systems T4, you can use the simple drawing tool, and it takes literally, once I teach you how to draw them, it takes about 30 seconds to set up, and it's a quick kind of idea. But let's take a look here today. So the market opens up right at your structure mid here. You know what? Let's do it this way. So this is what, by the way, this is what it looks like on Sierra charts, okay? So this is what it looks like, your day levels on Sierra charts. Let's turn those off for a minute, and let's turn on the overnight levels, and you can kind of see how this provided you with, really, it's been a fairly rotational kind of idea around that structure point here today. But I'm going to do this instead because I have this set up on NinjaTrader. Let's take a look here at a CL chart today on NinjaTrader. Now, what you're going to see here is, I'm going to turn this off also. Let's take off this, let's take that off. Okay. So what you see here is your levels here, let's make sure I have the right ones on. RTH, yeah, that's your RTH session levels. You also see a box around these levels here. And let's go into, let's see here, let's go to today's session. We'll just start with today's session. Okay. So this is your rotation points, right? And so you have a 10 tick box around the levels. So let me slow down here for a second. As you know, support and resistance is less about to the tick precision and more about zones of influence around a level here, right? And so on the CL, and I trade the CL and the ES, they have a 10 tick zone around the levels that we consider to be the support / resistance zone of influence, right? And so they really provide you with some excellent structure. All right, so let's take a look here. So for example, let's say, and I don't recommend you, what I'm about to show you, I don't recommend you do with any indicator and any support resistance idea, but I'm going to do it here for this discussion. And that is, I'm going to just take every time it approaches a level. I'm just going to show you what it would look like from a trading perspective if you just did that, okay? So we're going to go here. Market opens up, comes into your level here, and you're going to get short, and you're going to put your stop right above that, one tick above that level for an 11 tick stop. The market comes in, and it goes here as deep as 19 ticks. Well, depending on how you trade, if you take one off or you move to break even at a certain point, you should have been able to get safe. The market closes, comes back up, takes you out. Maybe you took one off at 10 ticks, maybe you didn't. Market comes up, closes above, pulls back into the level here for the long, and you take that here, and you've got an 11 tick stop. And this time, the market rallies as high as 12 ticks, comes back down. Do you get to break even? Maybe you're out of break even. Maybe you're not, right? I don't know. But let's say you did get out of break even, comes back, pulls back into this level, and you had an 11 tick stop. And this time the market rallies up 29 ticks. This is a very choppy day, by the way. And again, what I'm showing you, I don't necessarily recommend that you do, right? But I'm just showing you every time it rotates around a level, the opportunities that you may have had. Market comes down through it. Okay, let's say you didn't take anything there. You're out of break even. Market comes down through, pulls back here into the level. You said, okay, I'm going to have an 11 tick stop again right up here. And this time the market goes down to 24 ticks. Market comes back up, pulls back, it closes, pulls back into the level this time. Maybe you said, I'm just going to ride it this time a little longer, not move my stop. There was a 41 tick opportunity. Market comes back into the level again. Maybe you said, I'm going to get out somewhere on the pullback here. But you said, look, you know what? It came right back into my level here. Or maybe you didn't. Maybe you just said you're going to leave it here. And there was an opportunity all the way up to here, right, for 55 ticks. 11 tick stop, 55 ticks, that's 5-1. But even if you came into the party late, you said, look, I'm going to try to do it at the top of this level. Maybe I'll do it there. Maybe you don't do it there. But my point is that all of this interaction here together, you never, this band or zone of influence around this CL level here never really gave you much of a challenge, right? You could have gotten even. You could have taken, maybe you took 5 or 6 trades and you were break even on most of them. And then you took the one trade that went with an 11 tick stop to a 55 tick target. And that's the way today could have played out for you here. And let's take a look. This was yesterday, okay? And this was a difficult trading day yesterday because of all the chop, right? Same thing. Market pulls back into this level, right? And yeah, maybe an 11 tick stop. The market goes down to 14. Market closes above. And let's say you get long on the touch back into this level and you get a stop out. Well, that might be your first stop out. Then the market closes above, pulls back into it here, right, and goes up for 11 ticks, or you break even, right? So now the market comes down, and this is where it gets good. Market comes down, pulls back into this level, and you get short here. It never comes back up into this zone and really never really challenges your entry for the balance of the day. And if you held on to the entire session, there's a 78 tick reward to risk ratio. So 11 tick stop, 78 tick target. You took an 11 tick stop over here and you had, I don't know, let's go here. Let's look at it like this. Maybe you said, maybe you went here. You know, let's do this, right? So we'll do this and you do that, right? And you said, okay, the market breaks back in, clips down through it, pulls back into this zone. I'm going to get out here. Maybe you did it back up here after the close. Maybe you said when it finally broke this trend line up here. Well, that's still a 49 tick trade. 5-1 reward to risk ratio, and you have one stop for 10 or 11 ticks, and you had another one for 49 tick winner, right? And so when I showed you that chart earlier and I said pay attention to the 3.5-to-1 reward to risk ratio, that's important. Here's how that information is being generated. I'll just go back one day and then we'll look at another instrument here. All right, so let's say again, we'll do this again. Market opens up here and you get stopped out right here, okay? Then the market closes above and you said, look, I'm going to get long here, and dang, you got stopped again, right? So now you're 2 stops in the bank, 22 ticks. Well, this time the market pulls back into this level. You have an 11 tick stop up here, and this time the market sells all the way down to the level below, and that's 58 ticks. So you took, this is a 5-to-1 reward to risk ratio, erasing these two losing trades, right? And you had a 5-to-1 reward to risk ratio. Now, I'm not saying that you should take every single trade that comes down the road. I'm just showing you examples. You'll figure out a way to filter this stuff out on your own, right? You'll figure out a way to filter some of this stuff out, but, and maybe, you know, who knows what that filter looks like. Maybe it's a trend line, maybe you put a moving average cloud, maybe it's an Ichimoku cloud, however you want to do it. I'm just giving you examples using nothing else but the levels, right? All right, so let's take a look here at the ES specifically here today. All right, so settlement on the ES today was, and I'm going to put a line here on it because this was a $3,000 trade that we took in front of a live audience today, and I'm going to show you what we did to get into it. Okay, 43.75. Okay, that was settlement here. I think it was 43.70, 43.44 actually is settlement today on the ES. But that's close enough, right? We'll move it back a tick right here. 35.44. Okay, so let's turn off these levels for a second. No, there's the RTH. Okay, so settlement, I need to bring this back over here like that, right? So that's settlement here today. And as I got into this today, the market was trying to rally back up here, and I took 2 stops, and then I took a third one when I fat fingered the keyboard. I was kind of pissed off when it happened, but I took a third stop when I fat fingered the keyboard. And what I was seeing here is the delta was coming down. The delta was aggressively coming down, and we weren't building much of a base above this RTH session mid. So in the video today, you're going to see me short settlement. It's another setup that I have, and it gave me, the reason that I took this away from the market maker level is because there is a distance here of 7 points, 7.25 points between the settlement price and that level. So I said, look, it's going to react around settlement. I'll talk to you about it today in the video. I want you to come back and watch the video that I put in after we do this session here today. I want you to watch that video. But the delta was coming down aggressively, meaning that the sellers were aggressively coming in. And when I was short, I kept trying to short into this market maker level, and I kept getting tagged out up here over the top. Once we rallied into settlement, I was pretty sure that we were going to get a reaction off of that based on what I was seeing in the order flow and in the volume delta. And the market then began to sell off, right? So what you're going to see here is I was holding on for this level right down here. In fact, the low of the day at that point was 11, right? So I'm in at 43.75, which is right here, okay? And I wrote it down to our market maker level down here, but I actually shot just a little deeper to the bottom of that box, and that ends up being an even 30-point trade, right? So I did that in front of a live audience today, and there's going to be a video on that YouTube channel that I showed you here that we actually did that on a 2-lot trade. And so what I said to myself was, look, I know we've got 7.25 points. If we come down to the market maker level, that RTH mid, and we can't get through it, then I've got 7.25 points to be able to kind of maneuver around it. But really, we talked about coming all the way down to this RTH signal, and that's exactly what we did. And we took two lots for 30 points on the ES today. And that video, like I said, that video will be up on the YouTube channel a little bit later this evening. But let's keep working backwards here. Yesterday was an extremely volatile day on the ES, right? Yesterday was a pretty aggressive day on the ES, and look at this. This is your RTH signal here, right? This is your RTH signal right here. Market opens up right on top of this RTH signal, and I told the group this when we were in there today. I said, look, the market is at 150, I think it was 156 points low to high. The 10-day average range on the ES, it may have expanded because of yesterday's move, but the 10-day average range on the ES right now is 95.20, right? So 95 points is the 10-day average range on the ES. Well, we were at 156 points yesterday, right? When we opened up, we were at 156 points low to high. What I told the group is I said, look, it can continue to rally. There's no question about it. But when we open up on this RTH signal, there's going to be a super good opportunity to be able to take that trade, right? And so look at what happened here yesterday. This is your RTH signal, right? Really no heat down to the RTH mid. That is 61.5 points. And then it continued to drop, right? It didn't quite make it down to that level, but these levels, remember, they're based on price rotations and measurements. There's a huge distance between that, right? That's a 61-point opportunity right down to the structure midpoint where it did what? It bounced, right? And so if you said, look, I'm going to write it down to there, I'm going to write it down to there, and I'm going to, have my stop there. Maybe you get stopped out, and then you try it again, and maybe you get tagged one more time, and you say, well, gosh, it's just not going. And you said you wanted to try it another third time. Well, there's 31 points of opportunity. But that first trade there was 61 points. Maybe you take two and a half point losers, right? So you're down 5 points, you're up 60 points, down 5 points, and then you have a 31 point potential opportunity there again off of that level. Right, so let's just do one more time. Let's just do one more here. Okay, and so again, market opens up on this day right inside of that zone, right here, right at the bottom of that zone, all the way down to that level. But let's say you didn't trust that. That's 23 points. Let's say you didn't trust that, right? Market comes back up here. Maybe you take, let's see, pullback, drop through, pullback here, right? You have an opportunity. This came down to, that's 11.5 points, pulls back up, closes above, zips down through, stops you out, right? Market closes back, opens back up, and tags the level. Do you try it again? Maybe you do. If you don't, you had this opportunity potentially here, or maybe you just take a couple stops on the day. Who knows? You got to have a filter system a little bit, but the opportunity there that presented itself from level to level was about 25 ES points, right? So that's the ES. Let's take a look here. I know there's probably a number of NQ traders in here today. So let's turn off the let's turn on the daytime levels here and turn off the overnight levels, and the same opportunity here. Same kind of thing happened on the NQ today. Market opens up here at the mid level, and it went up, well, it opens up here, and that's 30 points, but the market comes right back down, gives you a chance to get in right here on the NQ at this point. And I'm not an NQ trader, right? So I'm just telling you, I'm just kind of what I'm looking at here. There's 141 NQ points today. Market bounces back up, closes above, comes back into your level, and then it went coast to coast. And it did that again, right? It just went coast to coast all day long. Boom, 140 point opportunities in between, bouncing in between these levels all day long. We'll take a step back here. This was yesterday, little bit of choppy zone, but then when the market finally did begin to break, right, it broke all the way to here, which was 358 NQ points, right? But if you just said here, right, it could go there. That's 190 points. And before you say, and I would say this too, by the way, before you say, gosh, you're just cherry picking ideas, I want you to know that I have a YouTube channel with over 400 of these videos that have been taken in front of a live audience. These were taken in front of a live audience in our day trading chat room, and there are 420 of these videos, right? And so again, all doing the same thing that I just described here to you now. These are just, and then once you apply a filter like volume, delta, heat map, whatever other filter you like, right? And you start applying them to these levels, they give you excellent locations for entries, they give you excellent locations for stops, and then they give you these really big targets that you could shoot for here. So I'm going to come back again to the questions here in just a minute. So let me tell you kind of what we're looking at here today. So here's what I'm offering, and I'm going to do this. I'm going to kind of go through it quickly, but this is kind of what we are looking at here. And I'm going to throw this link to this page into the main chat window here. So we have a training course, right? And our framework is built on what is the context, the structure, the strategy, our tactics, and our risk management. We have a training course here, and let me do this. this might be easier to see it this way. I'm going to go to the site and we're going to log in, and I'm going to show you some of these things here. So this is our member portal. You hit login, and again, some of this stuff here to the side, this is the program that we're offering. That's the active program right now. We have 5 videos, which is we're going to talk about what our methodology is. We have an introduction. This is a 100-page presentation with training information, etc., that you have there as well. We go through auction market theory. There's a 325 page PDF on auction market theory and value and rotations and all of those kinds of things. We have the market structure. This is where you get your market maker levels, right? This is by the way, these videos, so this was 20 minutes, this was an hour, this one's an hour video where we talk about market structure, etc. We have our strategy development. That's about a 30-minute presentation. Then I went through an hour-long presentation where I show you how we use our tools that you've gotten in the training to be able to sharpen that pencil. And so I put down and created our live trade plan here for you. So let me do this. I'll go to Evernote, and we have, let's see if I can get logged in here real quick. Evernote is where we do our trade plans here. All right, this is the place where we locate our trade plans. And so what I do in the training is I teach you exactly how these trade plans that I put together, right? And let's go here we'll go back to October and we'll just grab one of these. So this is what a trade plan looks like. We kind of go through the higher time frame analysis, then the overnight session, and I have charts, etc. on here, and then we give you trading ideas for the day. So in this video, I show you, this is an hour-long video where I show you in step-by-step detail how we go about using our market maker levels to provide you with trade plan ideas on the day as well. And then, of course, trading tactics. We had a presentation done by the good folks at Bookmap, and they teach you how to read order flow using the heat map and our levels. That's an hour and 15-minute long presentation. We have a presentation on risk management, which is about 50 minutes. This is our OTG risk analyzer. You can download a copy here. That's probably one of the best things that we do because it is about risk management, etc. And then we have NinjaTrader 8 templates, which you see here. And then, of course, we have Sierra chart templates and workbooks that you see here if you're interested in the Sierra chart program, and then of course the Sierra chart market maker levels. All right, so I say all of that to say that the masterclass we have sold for as much as $24.97 in the past. That is the masterclass program that we were just talking about. We've got the daily trade plans with trade setups specifically designed for our masterclass training program. Those are valued at $1,000, right? That's less than $100 a month if you were to be sold separately. Unlimited access to the day trading chat room, and again, never pay a room fee again. Give you an example. The going rate for a chat room out there is about $200 per month for 12 months. So in other places, you would own nothing, right? You don't own anything, and you still pay $200 a month, and you're renting the indicators and renting space in their chat room, and you would still be paying a monthly fee. So if you added all that together, that would give you a cumulative price of $75.04. However, we are running a special right now for our 10th year anniversary. So the total value is sold separately is a one-time price of $997, and we're going to limit it to the first 10 people for our 10-year anniversary that are interested in joining up with this program. And so here's what you need to do. So you go to that product page, and you type in the code OTG500, and that would give you the discount. So if you're back here on the product page, you want to come down here where it says coupon code, you want to type in OTG500, and you want to make sure that you do not forget to hit apply, and that brings the price down to $997. So again, you got to make sure you type in OTG500 and you hit apply, and that brings you down here to that total of $997. Now, I feel like I've talked a whole bunch here today, and I'm sure there are some questions. So let me come back here into the questions, and let's see what we've got here. So Eric said, congrats on 10 years. Thank you. Do you trade only oil and energy stocks? No, as we've seen here today, I trade ES and oil is my idea here. Can we participate Let's see. Can we participate from, I'm not sure what that says, honestly. From Cam, I'm not sure what that says, so sorry about that. Are they not taken over by algo system now? How do we, how does it go 78 ticks? Yeah, so, okay. So remember, yes, the algos have a big play in what's happening, but these levels, these rotations, and it's really cool what you start to see if you had a heat map, and if I had a heat map up here, I could show you, but the pools of liquidity, not transacted volume, but the pools of liquidity begin to stack up around these levels, and that's an important thing, right? That's how you know your support and resistance ideas are valid, regardless of what you're looking at, is when the pools of liquidity or the orders, short or long, begin to stack up in that area. So one of the deciphering tools that I like to look at is I have that book map, heat map. And so as the market is rallying into a level and the liquidity, the shorts are starting to stack up around one of my levels, then I know that that's going to be a valid spot on the chart and that there's going to be some activity around that. So I'm going to show you this here as well. Let me do this. So this is the ES chart that we look at in the room. So when I got short up here today around settlement, which was back here, about right in this area here today, when I got short up here around settlement, is that the right time? Yeah. Look at what the delta was doing, right? This was a very clear indication. Even if you look right here, okay? Let me see if I can expand this up a little bit here. I'll bring this up just a bit here for you, like this. Okay. Look at what's happening right here. What's price doing? Delta price is coming down and price is rallying. So you may say to yourself, how can it be that the delta is dropping but price is rallying? What the delta is measuring in this instance is the number of sellers aggressively hitting the market, or buyers aggressively hitting the market. And so this is a little bit of seller absorption going on here, right? So you got price that's rallying and the delta is dropping, right? Once we dropped below the zero level, I was like, okay, this is beginning to turn. Now, if you were in the room with us today, and some of you may have been in the guest room, the market ran through me a couple of times, right? It kind of pulled up through me. It kind of pushed through me twice, 2 or 3 times. But once we came back into the settlement price up here today, and I don't know that I have settlement marked. Yeah, settlement is right here, right? Once we started coming into this settlement area, look at what the volume has already been doing, right? Look at the volume down here. So let me go to tools and see if I can highlight this rectangle. Look right here, okay? Look at what your volume is doing in the same place right here, okay? The same exact place. Volume, the sellers are aggressively pushing in while price is pushing back into settlement. And so this is where you see me get short today, right? And then I take it down to the RTH signal. And we used this settlement, we used settlement, and we used the volume delta to look to get short, right? And once we were there, we targeted our market maker level, the RTH signal. Well, that was a 30-point ES move to the downside, right? So the levels in conjunction with the context that the market is in, right? And at this point, the market was, at this point of the day, in the morning, what had the market been doing? What was the context? The market was high, lower high, lower high, right? Market was making a lower highs into this area. And so we took a shot at settlement. Liquidity was pulling up around it. The market was rallying, but the sellers were coming in aggressively, trying to begin to drive it down. And we took that all the way to our market maker level target. And that's kind of the way that trade went down in the trade room today. So hopefully that makes sense. All right, Scott's got a question. NinjaTrader only. We have NinjaTrader 7, NinjaTrader 8, and Sierra charts, Scott. And so again, if you are interested, make sure you go to that product page, type in the code OTG500, get a $500 discount. We can unlock your content pretty quick, like within 5-10 minutes. And then you can join us in the day trading chat room. Any other questions here before we sign off today? Yeah, it's here it is on gold. Here's those levels on gold. I think I have them somewhere here. Hang on a second. I thought I had a gold chart up because I knew I would be asked that. Here's what it looks like on gold, and I think they did pretty good on gold today. Yeah, here it is on gold, right? So this is what the chart looks like here on gold today. So again, you had your market maker levels. I'm going to take this, we're going to take that off, and look what happened here. This is right. That's the market opened up, came down into the level, and gave you an opportunity. And I'm not a gold trader, but that's 12.8 points, I guess. Is that what that is? Right. And that's how that worked today on gold. And if you look back here yesterday, right, market pulls back into the level, and then sells off all the way down there. There's 32.1 whatever units that is. I don't trade gold, so my apologies for that. But that gives you an idea of how the levels work on gold as well. Let's see. Question, are these levels known before the cash market session opens? Yeah, I teach you how to draw them, right? And so if you said, look, I don't want to wait until it opens for that signal to form up, I teach you how to draw them. And it takes you about 30 seconds to learn how to draw it. And then once I teach you, the drawing tool is very simple to set up. You can set up at any platform. And then I give you the data to put those into that. So yeah, you can do that if you want to know beforehand. I like to wait because I'm not really big on trading right at the open, but that's just me. But if you wanted to learn how to do that, and if you wanted to do that, you can certainly get that done very quickly. Is the chat room where you take? Yeah, that's it. I do take the chat. I do take the trades in the day trading chat room in real time, and so that looks like. Let me see if I can get this open here for you. So what you would come back here into the membership site, and we have the day trading chat room access, trading chat room, and then you click that, it opens up the chat room, and then you log in, right? And this is what it looks like. And so that's where the day trading chat room is every day. Yes, sir. Very good. All right, my friends, I appreciate your time today, and certainly would like to see you in there. So again, you have a link in there. If you're interested in joining up here, click on that product page, type in the OTG 500 code. If you have any questions, I'm going to type in my email address. If you have any questions at all, you can email me at jason@mailotg.com. All right, my friends, thank you for spending some time here with me today. I told you I'd try to keep it to within an hour. I think we were successfully able to do that. And unless there are any additional questions, I am off and running here. So any questions before we bail out of here today? Awesome. All right. Well, thanks, everyone. I appreciate it. Anna, I'm not sure if you're here. If you are here, thanks for the opportunity to present here today. And for everybody else, hopefully we'll see you again soon.